Boys, welcome back to the channel, or I guess welcome to the channel, because this is the first video I'm making. Now, just to preface, if you have no idea who I am, I'm Jake. I've been a full-time trader for the past year and a half. I'm currently living with housemates, and as soon as this lease ends, I'm traveling as much as I possibly can. And I'm going to be sharing the exact strategies and concepts that I learned to allow me to do this. So you should already know, like, RSI, MACD, Fib, basic RS. Now take that, fucking throw it out the window, because no one cares. We're going to completely start from scratch. So this video in particular is going to be covering everything to do with accumulation. Now it's a very in-depth topic, so bear with me, and by the end you should have a decent foundation to keep moving on through the videos. And I do also want to say, this concept in particular, I kind of got a base for from Cotton, and I'll link him down below. I wouldn't recommend going through all of his content, but I've built off this basic concept, so let's get into it. Okay, the very first thing that is critical to understand is that coins can't just have big moves out of the blue. So let's say you have this RS, right? We'll go with this example. This can't just go like this and just break it. There needs to be some sort of accumulation that shows the buyers are soaking up the selling pressure from this to move upwards. Now there's a 5-step rule that Cotton talks about for accumulation, and it's not set in stone, but it is the foundation for what we're going to talk about moving forwards. And it goes like this. So let's say you have a downtrend, you will have a valley. Now if you don't know what like valleys, peaks, swing lows, swing high, like etc., like super fundamental knowledge are, join our Discord because we have videos for all of that. But let's say you have an RS here. The general idea of accumulation is that the first step, actually let's do this in the same color. The first step is going to be hitting this. So you're hitting this demand for the first time, okay? Actually, sorry, that's step 2. So step 1 is this. Step 2 is this. Easy. So step 3 is that you're going to reject off this naturally because there's always going to be sellers in the first touch, which is why this is a good place to short. Step 3 is to find an uptrend, which will be here. So this shows that the buying pressure is actually pretty consistent. So there's been a little bit of accumulation here. It's come up, and now it's holding this level. Sick. This is number 3. Number 4 is you get rejected again. And number 5 is the breakout. So we have this kind of idea. Now the next fundamental idea that you have to understand is that everything in charts is fractal. So there are tiny moves that lead to big moves, that lead to macro moves, that lead to weekly, monthly moves. And all of these patterns are the exact same. So what you see on the 1 second chart is the exact same as 1 minute, same as 15 hour, 4 hour weekly. So let's say you have a macro chart that looks like this. So let's say this is the daily chart, okay? And you're seeing some sign of strength here. Now, if we were to take this section right here and open it up, you would see the exact same fractal pattern. So you would see it comes down, we have this idea, it gets up, it confirms, and then if you magnify this, it'd be the exact same thing where you have this fractal pattern. So charts are formed through these cycles of cycles of cycles of cycles. And we can discern exactly where a chart is going and what the strength and weakness is with these cycles. Let me explain. Alright, this chart is IDEX from when it first got listed on Binance. Now, first important piece of information to understand is that there's a downtrend. And downtrends, uptrends don't last forever, and there's always relief. And we can see that relief through an accumulation. So the very first step is for that downtrend to find a bottom. So if you look at this section right here, let's say it's found a bottom, it's come up, but this is not really confirming anything, and it's not actually getting to this level again. So this is just going to continue, which it does. This doesn't find a bottom, fails, continues lower. Now on lower time frames, which I can't see because this chart was so far back, in here, you can actually see it here, but there would have been this tiny moment in here where this accumulates. And then it confirms right here. You see that? So we have this tiny accumulation and it confirms. So now we can think a little bit more about macro structure. So we have this swing low. It's attacked once, but doesn't find that lower low. So it continues lower, finds this bottom with the accumulation, attacks this for the first time properly, healthily, finds a higher low, confirms the accumulation, comes up, you see the final condensing, bang. And this is a trade. Right here, you could take this trade, 14%, 45 minutes. That's an incredibly solid trade for basically no risk if you're taking that kind of breakout. If it grabs liquidity or if it does something crazy, you can just exit out, less than 1% stop loss, tiny loss for what the game was. So you can already see that there are 2 cycles here, and we can expand that again. So we have this swing low, attacks for the first time, finds a low, which is this. Attacks for a second time, confirms this accumulation, this one right here, comes up, condenses, and this is your macro break because it means that all of this has failed with this massive accumulation, and you can see it build in steps to lead towards that macro move. So theoretically, you could have actually entered here, held to see if this accumulates or if it continues lower, and if you had, you could have exited here, which would have been a great trade, or, I mean, if you had balls of steel, you could have taken this and had this whole trade just by seeing this perfect bottom here. So let's take a look at a few other examples. So this is MLN, which had a like 140% run yesterday, which was massive. Kind of normal on small caps. These moves happen every few weeks, but we can trade them. Now, whenever you have these downtrends, at some point there has to be relief before continuing down. It's the way of the charts. And you can see that through accumulation. So say we have this swing low here. Now this level, from here on in, we're going to call origin. So whenever you have that level that is just flat and you're accumulating towards it, that is going to be the origin. So if we take this, hits it for the first time, but fails to find that bottom, hits it again, and now has a higher low, so now we have this accumulation idea, condenses towards the origin, and breakout. And this is 8% in 30 minutes, which is a great trade for basically 1% stop loss. Okay, now here's another example, and this one's slightly different, but it's still the exact same idea. Okay, let's take another coin for an example. So this is ETH-W. Now this had a gigantic sell-off, gigantic, and I know at some point this will have a decent accumulation to be able to trade. So just for the sake of talking about accumulation, we can wait for a moment where there is an accumulation. So let's just keep looking. There's a low. This is kind of weird. Okay, now I can see that this is accumulating here because if we look at what the structure of this chart is, we have this structure, right? It's come down, it's tested it for the first time, come down again, testing this level again, and now it's condensing here. So I can actually draw something like this and see how tight this is condensing, like especially this end here. Like this moment right here is so condensed towards this. And this is going to be an easy break, which is what we caught, and now we have to wait for the confirmation. So if we had traded that, you would need to have your stop loss. Either you scalp this, which is what I did, I'm pretty sure, or you wait for this confirmation and take another entry. So now that this accumulation has confirmed, we know that there's a big move coming because the bottom of this whole downtrend, of this whole thing, has formed and confirmed, which leads to the ridiculous run. And there are obviously other reasons why this happens, and I'll talk about it in future videos. But the important thing to recognize is this accumulation right here. How it forms, comes down, accumulates, comes up, confirms, and slingshot. This structure. Now I'll do one more example, and you can skip ahead if you already get the fucking concept. But again, we have a massive downtrend, so we're waiting for an accumulation moment. Now, there's a concept called overextension, and I'll talk about that in another video, so it doesn't matter. For right now, all you need to understand is that we're looking for an accumulation. So, comes down. Okay, we're waiting for a higher low. It doesn't come, which means that down pressure is just continuing. So here, we can wait for an accumulation again, fails again. So this downtrend is just continuing. And it keeps failing until we finally have this moment where we're kind of flatlining, okay? And this is where we'll have an accumulation moment. So if we draw something like this, for example, this will be our origin, and we're waiting for this to break for a move up, which is exactly what we get. So we can break this down by seeing this kind of structure leading to break. And it's all about accumulating towards critical levels, because this is all just accumulating under this level here. So the rule of 1, 2, 3, 4, 5 is never going to play out the exact way. Or it's pretty rare for that to happen because that's like a perfect case scenario. Okay, so by now, you should be able to understand that when there's a downtrend, a coin will accumulate to show that the pressure's moving to the other side, and then we get our perfect entry for the breakout. Easy. Now it's probably going to get a little bit more complicated. So let's say that we have an accumulation like this, okay? There's actually ways that we can get better entries with fractal accumulations. Let me explain. So let's say we have an accumulation like this, okay? Let's say this is the macro structure, something like this. Now, maybe somewhere in here, there is actually a microstructure that looks like this and confirms, and that's what the actual structure is for this bottom. This is going to be your perfect entry to wait and get this whole swing. And if you get these perfect entries, all it means is that your RR is going to be ridiculous because you're trading based on this little structure here. So let's say that was the accumulation. Okay, let's say this is it. Your RR would take this breakout, stop loss underneath this low here, for example, and you can get this breakout with this RR by getting the perfect fractal moment instead of having to manage your risk like this. So that is the difference between getting these perfect 1 minute entries instead of these 4 hour or daily entries. Now the problem here is that accumulation, the micro accumulation, can form in many different ways. And I'll show you exactly what I mean. So let's go to that ETHW example for a second. So we have this downtrend, right? Continuing. Now there are actually better entries than this. And one of them is right here. Right here. Because we have this interior trend that is actually the gradient for this whole move, which I'll talk about later. But essentially, the chart is moving in this direction, okay? So first of all, we have this origin. So we're trying to accumulate towards this, but there are fractal moves that are more important. So if we look at this move right here, this is a micro accumulation to succeed this massive accumulation. And it's all about finding these perfect moments. Like this would have been my entry because we have this interior trend, which we'll cover later. This accumulation comes up and then breaks the macro accumulation. Okay, so here's a really, really good example of that. So we have this accumulation here, okay? So we've had massive selling from the listing, and now we're trying to consolidate. So now we're trying to stay in this range here. And you see how strong this level is? The fact that it's touched this many times means that it's going to be a great break when it does break. But the question is, can we get a better entry than this? And the answer is yes. So let's say from here, we're already targeting this level. So this is already critical. Now, are there better entries that we can take? So from here, we're actually looking for an accumulation on a small time frame that is going to lead to push up out of the range. So if we follow this, there is one right here. You see that? So there's this final, and this could be historically relevant too. It could be something like this, whatever it is. This is a smaller time frame accumulation because we have this, tested it for the first time, failed, found a low, come up, hit it again, lower low, and then we have our breakout, which is this moment, confirms, shoots to the fucking moon. And if you missed that, there's actually another accumulation. So this is the next perfect entry for accumulation. And this is going to break up and explode everything. So let's dive in once more. How many accumulations can you see in this chart? Let me draw them. There's one here. There's one here. There's one here. There's one here. And here. And I can do these all day. You see these structures? They're always the exact same thing. These accumulations are everywhere. And then we can also do it on the reverse. There's another one here. Accumulation. Same exact idea. Always. Micro. Let's go to the 1 minute. Accumulation here. And here. And this one I think we already pointed out. There's this micro accumulation here. You see what I'm saying? All of these structures are formed on every time frame. 1 second structures break 1 minute, they break 15, they break hourly, they break 4 hour, the daily, blah, blah, blah. Keeps going. And when you can learn to recognize these structures, it's incredibly easy to get ridiculous RR. And no one knows about it somehow. Let's say you were in this moment of the move, instead of drawing all of these levels and having like 10 different areas, or you have like an order block or whatever the fuck, an order block that's like 7% long in range. Instead of doing that, you can just trade the confirmation. So instead of having to knife catch this, when you have all these levels here that it could possibly reject, or this massive fucking zone where you have to have a huge stop loss, all you have to do is wait for this moment and enter here. I don't understand why people are not doing this. Now there is an exception, because if you have a fuck ton of capital and you have to open a massive position, then you need that zone to be able to accumulate, but that's a whole other thing. Unless you're putting tens of millions of dollars on a position, it doesn't matter. Yo, this is post-editor. I just want to say, the reason why the strategy works as well is because I market all of my entries. And that might sound ridiculous because of fees and all that. Fees don't matter when you're trading smalls and mid caps. Because say if the fee was 0.8%, if you're taking a 10% trade, it doesn't matter. It's a tiny part of your overall profit. So, I market all my trades. So yeah, another concept that you should probably know, but just in case you don't, charts go the exact same way up and down. So if I draw, let's say we take the basic accumulation idea. So if I draw this, okay, this is the exact same for tops and for bottoms. It doesn't change. So you can get perfect shorts and perfect longs with the exact same method. So I'm going to leave this first video here. Here's what I would recommend doing. I would recommend going onto charts, using replay tool or whatever you have, go back through charts and try and circle and find the accumulations for yourselves. Because I guarantee you'll be able to now that you understand how they kind of form. Now in the next videos, we'll be exploding this concept even further to get the best perfect little entries that we can. And I hope you're along for the ride. If you enjoyed this video or if it gave you value, smash.